Okay, testing 1 2 3, testing 1 2 3. The rain in Spain falls mainly on the plains. The ants in France stay mainly in your bonds. Yeah, cool. So hey, welcome to what day is it? It's Wednesday, isn't it? Yeah, today is Wednesday, September 5th, 2018. This is your daily Forex trading strategy session brought to you by Traders Way, hosted by Forex.Today. Let me remind you that trading is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. Oops. But please stay small, stay humble, focus on the long term, and never risk money you cannot afford to lose. So, hey, nice to meet you. My name is Wayne McDonald. I am the Chief FX Market Strategist for TradersWay.com. Thank you so much for being a client. We appreciate you. We work hard for you. We want you to succeed. As I say often, it's a symbiotic relationship. If I can, through these webinars, provide the skills and confidence that you need to trade successfully with a conservative, disciplined approach with a long-term overview of a trading career, maybe you will find that success. Maybe through these presentations, I'll earn your loyalty and respect. And maybe you'll consider Traders Way to be your prime broker for your successful Forex trading business. I think that's a really smart business model. For Traders Way to succeed, you must succeed. So we're in it together. So anyways, I'm here every single day. Thank you so much for attending. Make sure, if you're on a YouTube, make sure you subscribe so that when I do these webinars, even if it's a few minutes late like today, you will be notified and brought directly to the webinar. Joe said, did the like. I appreciate that too. Also, if you're watching a recording, leave a comment. Just say hi. Just say hi. Say thanks. Say what's up. All that kind of stuff. So without further ado, we'll do some technical analysis today. Sounds good, right? I like technical analysis. We'll do gold, we'll do oil, we'll do all the normal things. If you want me to cover a specific one, please ask in the chat, and I'd be happy to do so. If you are watching the video and you are really concerned about a currency pair that I didn't cover in the live webinar, ask and just put it in the comment below the recorded video, and I'll try to get to it tomorrow. Rob says, thanks for being here. Hey, I love being here. So, my pleasure. All right, so let's get on with it, huh? All right, this is really hopeful. So one of the things we discussed yesterday, if you were a bull, so look, this is the bearish trade plan, right? Remember I said if you're a bear, you'd want it to really come up here. You could kind of kick it off this 80-50 area, but if you were a bear, you'd really want it to come up there. Now, I'm a bull. I'd like this to go up. I understood yesterday that it wasn't really, the market conditions were not favorable to this bullish bias, and I'm not really in love with Aussie. So this is the worst thing, or let's say least likely to go up out of all the yen pairs, but still I'd like it to go up, right? So I have to be a bull in that case, but I'm looking for a bullish scenario. And what we discussed yesterday is we need to keep it above this line, because it either goes up and struggles, but maybe one day will work its way up. But if it falls further, forget about it. Not interested. So that is my Alamo, my line in the sand, right? If the price drops below that, then run away, run away, as they say in the Quest for the Holy Grail. Monty Python, run away. So anyways, still good in the hood. Gives me some hope. Maybe it's false hope. Maybe it's fool's gold. That's cool. But I'm still going to stay bullish above this area. And and hopefully it works its way up. If I bought down here, so let's look at it from like this point of view. Okay, if you bought down in here, you still should take profit here because there's absolutely no guarantee this is bullish. There's absolutely no guarantee it's going to work its way up here. In fact, I would expect price when it gets to that area, I would expect it to drop. Bare minimum drop to this level, most likely drop here. So, like, I think your best case scenario is a bull. Best. You'd be lucky if it did this. Okay. Okay. And then break to the upside. That's best case scenario. And you probably get this on other pairs if they all turn bullish, because Aussie's not that bullish at the moment. But that's the bare minimum I would be planning for. And the reason for this coming down, no matter how bullish this is going back to this plan. If I was a bear and I had an opportunity, oops, that's too far out, and I had an opportunity to sell up here, I would do it. There's no doubt. Let me get rid of this. It's just one less thing to look at. Okay. Okay. You got it? So maybe, just maybe it does, let's say this. Okay. Which doesn't say, hey man, this is going to skyrocket. This is going to take off. Well, you got to play it like it's a range. So even getting back up to here where we were, which remember this trade plan, this inverse head and shoulders? I think so this is our best case scenario now, this midpoint. And then the next next most likely scenario in a bullish trade, or from a bullish point of view, would be maybe back up into here. And even that's not guaranteed, right? So how do you say it in a lot less words? I might come to the chart bullish, meaning the chart doesn't make me bullish. That'd be a fundamental play. Okay, so I open it up and I ask myself, is this favorable? Are these market conditions favorable to my bias? Well, the only thing I have here truly for a trade setup is a double bottom, which is a pretty aggressive trade because typically what you want is a double bottom, higher high, higher low of some sort, right? But a double bottom is a reversal pattern, and it's at exactly the price I wanted it. So you're like, okay, take a shot, keep your stop close, and then start looking for reversal type patterns. At least, the next thing would be a breakout here, drop, and then up to this level. But we're a long ways away from that. Well, makes sense? So I might be a bull. Market conditions are not necessarily favorable quite yet, but I do have a double bottom at support, so maybe I take a shot. But look how obvious this is. It should go up and should go down if the market's going to stay more bearish than bullish. But the part of my fundamental analysis has to do with seasonality, and that this is the time of year very often, but not always, the yen pairs start going up. So to get a double bottom at support is, fuel to the fire, even if it's wrong. I'm going to believe it, right? Because it's called confirmation bias. I'm looking for a reversal pattern this week. Oh, look, there's a reversal pattern. Might be wrong, but I get what I'm looking for, right? Okay. Very important here. Breakout of the trend. But what about that oil, huh? So we'll have to get to oil next. We talked about Brent and crude yesterday being pretty elevated in price at some technical resistance. So that means if those prices start coming down, this pair might start going up. I have a feeling this isn't even related to oil anymore. Could this be like the whole US-Canada NAFTA negotiations? Sure. Sure, why not? Okay, so Bulls, is this a good place to buy? It's a horrible place to buy. Bears, this is a good place to sell. It's moderately okay to sell. Are you at resistance? Yes, you're at monthly resistance, but it's not a long-term resistance zone. Are you at weekly resistance? Yes. Is that favorable to selling? Well, it's a place where bulls are supposed to take profit, which isn't necessarily the same as bears selling. It's bulls taking profit. All right. But under the rules of engagement that I teach, you do have permission to consider, if you want to, a counter trend trade. But remember, counter trend trades are basically, twice the risk, half the reward. So it's your call. I wouldn't want to make a career of counter trend trading, but it's plausible. I think this time of the month, meaning with non-farm payrolls being on Friday, that if this could probably just come down and then consolidate for a couple of days, right? Right? So what do you want to do here? If you wanted to sell it, you could do it. 4 hour is thinking about it, so you got some permission, cut a corner a little bit. You're still above the 21, but it doesn't look like it wants to skyrocket, right? So you start cutting corners here. And by that, I mean dropping down into small time frames. So you've already made the decision to sell if that's the decision you made. Do you sell now? Well, you've reached the 2155, right? So you should be retracing back to the 200, which is the fair market value. So I would think if you were really bearish on this counter trend, stop hunting kind of mission, you'd get the down to the 200, up to the roll reversal, and then maybe down to the next level. Okay? You know what I'm talking about? I think it's a mediocre trade, but it's a trade nonetheless. Probably get you through New York. Okay. Here we are, clear as mud. And look, because of that, we're consolidating. Okay. I believe our conversation was, if you're a bull, you'd buy here. If you're a bear, you'd sell there. And look, it did both, right? Which is probably a pretty good one to miss. One thing to point out, some people will say, well, is this a giant head and shoulders? If it went up to here, left shoulder, and then down. No, because you need a trend to reverse, and that's not because it's a reversal pattern, you need something to reverse. That something would be a trend, and the trend was not up, it was down, so this is just roll reversal. Okay, big consolidation, little consolidation, breakout. Okay, once again, I'd like your fundamental bias to rule your trading. So you should already be a bull or bear like you were here or even way over here. So bears would like to sell a little higher up into this zone, really is where bears would like to sell like way up here. Okay, this is where a bear really would like to sell. But then I'm going to drag this down to collect that and this and then, all that. So really, that's where a bear would prefer to sell. And bulls are not going to be happy about it. But if bears take over, drive it down into the weekly pivot profit zone, okay, then you do have permission to take it the other way. And now here's the interesting thing. If I zoom in, someone might be trying to play this as the counter trend, right? They may say, okay, close enough. It hit my support. It hit, I'm trying to get this in there. It's hard to see, but this is the pivot profit zone, right? So down into here, they may account this as a hit, right? So what they could do now is, they might treat this as a double bottom, right? And now if it made a higher high, like up into here, it's a little tricky because that's a sell zone. That might actually give bulls some confidence, because for them, they're going to count this as a double bottom higher high. It might be fool's gold like the other one, because I think there's bears here and actually up in here. So maybe a bull drives it up and then they crash it down. What you believe has nothing to do with what you see here. I need to keep making that. You should already have an opinion of whether euro dollar is going up or whether euro dollar is going down. This is inconclusive. So if you're a bear, you believe euro dollar is going down, then you're probably better to sell here or sell here. Just wait. You don't have to do anything. And if you're a bull, you believe euro dollar is going to go up, you should try doing things like playing this double bottom. But I'll be honest with you, this double bottom is pretty pathetic. It is a monthly central, so you have to be quite aggressive. But I don't know if market conditions justify that. So anyways, food for thought. Okay. Are you a bull or a bear? If you can answer that, your trading is going to be simplified greatly. Notice that this is the sell zone on the monthly basis. Notice this is where bulls were supposed to take profit. What can you learn from that? Okay, last week's high, this month's sell. Okay, they're not exact. They're a couple of pips off, right? It's not perfect, but it's this whole area is a sell zone. And you'll notice here that you'll say, well, Wayne, it just made a higher high, higher low, higher high. How would you have known to have sold this last week? I'm like, well, this chart doesn't say any of that, of course. But if you are a bear, well, this is an opportunity and that's an opportunity. So therefore, you put down a trade plan based on that. Okay? Mathilahan says, bull. All right, in this case, you're going to look at this as a counter trend. Okay, bears are supposed to take profit when they get into this green area. Okay? Now, if it was Thursday, I'd say forget about it. Well, it's Wednesday today, so you can think about it. I don't think it's a good trade, but if it sets up for you, especially if it does like double bottoms and stuff. But let's put it this way. On a monthly basis, if you're a bull, this is the price you want. That's what I would have said even last week, before September. I would have said, yeah, if I wanted to buy pound dollar, I'd try to buy it down here. Now, it would have sounded funny if we were up here at 130. And I'm like, yeah, I'm a bull, but I'd like it to drop to 128. You say, well, why would you sell at 128? Or, sorry, why would you buy at 128? Well, that's the price I want. So now we're way down here, and a lot of people will say, well, how could you buy it now? It fell 200 pips. And you see the short-sightedness of being stuck on your 15-minute chart all the time? You're missing that story. You can say, well, I want to buy it here. Why would I want to buy it here? This is the monthly buy, and this is where bears are supposed to get out on this week. The conservative. The aggressive ones down here, I already marked that, so you should know that. But together, this is a little buy zone. And if I'm a bull and I'm able to buy there, or some formation after that, my target is actually, my aggressive target is 134. My conservative target is 133. Yeah, I know 500 pips might not be enough for you, but it's a start. Okay? But that's what your trade plan, what trade planning is. So we would have had this, let's say the last week of August, this would have been something that was plannable. If I was a bull and I thought the pig, the Great British Pound, was way oversold, they're making way too much out of Brexit, And I think global macroeconomics is good. The US dollar is going to weaken. Okay, if that was all my plan, then I'd be looking, and I mean, even if you can't see this stuff, right? Like maybe I can, let me see if I can do something. Yeah. So like looking at it this way, even in this red zone, I could say, well, if I was a bull, right, where would I want to buy? And I'd look at those prices and I'd say, well, way down in here. Now, it's not good based on price action, but I'm using market in that intelligence. Oops. Yeah. Well, that's not sure what you see here. I guess that's what you see. All right. So anyways, so down into here is the first move. Down into here is the first move. Okay, what about bears? Well, you kind of already had your chance. So if I were to zoom in now, I think what you're going to want is, you know, false bulls are going to drive you down. Okay. More likely than not, you should just take your profit and wait till NFP to go by. So trader PJ says, you know, multiple trades, selling from 130 down to here. Okay, cool. Just remind yourself, on a weekly basis, you should be taking some risk out of the market, aka taking profit. Okay. If it's a monthly swing, then your goal is to drive it down to 125. So once again, only 500 pips. Does that mean you're so confident you should ignore your risks? No, but you could argue that you want to see it head down to S2. You can see there's also going to be support at S1. The reason there's so many layers of support in your way on this one is that it retraced so much. But notice this, like the down, 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 up, up, sell, down, 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 up, sell, down, 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 up, sell. Then it was down, 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 down. Three-wave correction. Okay, and basically what it has to do is it needs to start over. 55's in control here, as you notice. So that predicts a big double bottom. What that does is does this. And that's what I'm trying to kind of warn you. There's other things on the shorter term that warn you of such a situation. But this point of view from the daily says, you know what? The week after non-farm payrolls will probably double bottom. And then the rest of September will retrace back to the 200 EMA, which is it's moving to the right and to the down. So, you know, something like that. Okay, so now we're talking October, maybe we're up there. So just make sure you have the full complete story. John's looking forward to international merchandise trade for CAD and trade balance for the U.S. Do you find that those news releases offer a lot of volatility for you? Okay, let's do gold and oil here. Okay. So what can we learn? Let me clean some of this up. Okay. What is this gray zone? The gray zone is a buy zone. Okay, and then this level here, which I tried to highlight, but I might be highlighted over a highlight. Okay, this cluster here, that's where bears are supposed to get out. The gray area above, which is this area, that's where bulls are supposed to get in. So that's pretty significant stuff. Yeah, okay, we'll see, Johnny. Okay. So how, if this says bears should get out, and if this says bulls should get in, what should we look for in this process of it going up? Because that's kind of what it's saying, but market conditions are not bullish now. So what, excuse me, what would we look for to see something more bullish, right? I think it'd be cool to get a double bottom. Oops. Now, why would I want a double bottom if I'm a bull? Because it squeezes more bears out, and it makes the next move easier because there's less people fighting. And the challenge now is this area here. So you have to say, well, how are we going to get through that? That's a brick wall. Well, less bears is a good start, and more bulls would be even better, right? So combine these things. Double bottom should scare bears out, and a higher high should get some bulls in, and that's probably the birth of a reversal. Okay, then you got to mark this too. Okay, but you see how you're fighting a lot when you're doing reversals? That's why you don't want to kind of be the one reversing markets. Okay, it's a tough job and it doesn't pay well. So what we should all be hoping for is a trend. So you can buy the up, 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 down, down, buy, up, 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 down, down, buy, up, 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 right? Or down, 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 up, up, sell, down, 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 up, up, sell. This, not amazing, right? Okay, and there we are in the whole grand scheme of things. What do you think? Is it hopeful? What are the people down here thinking? I bet you they're thinking stop losses at break even. I don't care what happens next. Right? Another thing you could say is, if you're a bull, that you're bullish until this price, which is 1180, sorry. Right? If it drops below 1180, you'll get out, but then you'll buy it back around 1160, I guess is what you're doing. And you don't have anything else than that. Now, that would be amazing. 1160 takes us way back. Right? We'd have to go way back to late 2016. I mean, we're talking years to get lower than that. So hopefully we don't make that trip, right? Okay. Hopefully we don't get lower than that. There'd be something pretty wrong for that to happen as well, I would think. I don't think a drop like that would be that healthy. So this is, like I said on a couple of other pairs, I think yesterday or the day before, we're in some pretty interesting areas. Like it needs to reverse, or we need to really come up with some new analysis, or take a break, or something. Okay, Johnny says, seems like price action today, regardless of what pair, consists mainly of whipsaws. Well, okay, good observation. Now, first of all, we don't know if that's true. That's your observation, and sometimes, again, confirmation bias, right? Couple of things that could be happening. You could be trading the wrong thing at the wrong time of day and all that kind of stuff, but I don't think that's you. More likely, if I were me, I would blame non-farm payrolls because it's an important singularity in the price-time continuum, right? So I would write it down to say, and in particular, maybe it has to do with Monday being a holiday in the United States as well, right? So maybe a lot of people took the rest of this week off because they don't like to trade before non-farm payrolls, and it was a short week anyways, and all that kind of stuff, right? So I don't know. Write it down and just say, well, in your journal, let's say, a lot of whipsaws, looking for a lot of reversals. I mean, looking for reversals, that's tough trading. I want trends. Trend trading is much easier than, street fights is what a reversal is, right? I mean, I have to kill all these bears and convince bulls to join my team, right? So you just put it down and say, okay, well, there's a holiday week. Maybe that messes it up. We've got non-farm payrolls. Maybe that messes it up. So is this a week you would like to lose a lot of money? I worked with a guy that went through a losing period, a fairly bad losing period. And the first thing I had him do is every single day say out loud, today I am not going to lose a lot of money. Today I am a patient, disciplined, conservative trader. I only trade what I have planned. I am in control, and I'm not going to lose a lot of money today, right? And now you might roll your eyes like, oh, Yvain, look at this guy, right? Right out of the new age. What, am I doing yoga at the same time as I'm saying that? Drinking my green tea, burning incense. Look, if you say it out loud, you have to manifest it, right? And it's amazing how our big losses tend to happen when we're lazy. Right? When we just sort of, we become lethargic, and then because we're lethargic, we lose our discipline and just some bad things, right? Right? Something happens, right? So by saying all these things and really truly recognizing that maybe this isn't an amazing week. I mean, it could be an amazing week, but if you recognize that there's whipsaws, like you said, John, then you could say, well, why are there whipsaws? You're like, well, there was a holiday week, and we do have that NFP coming up. Maybe I shouldn't be betting the farm, right? Believe in this stuff. Yeah, it's too bad I can't do like Reiki, Forex Reiki. Through space-time, I can mentally fix you. Okay? But it's amazing to just say, you know what, this is not a week where I should be taking big risks, but then there are other weeks that you should be aggressive. And it's amazing how newer traders, whether it's their first 5 months or their first 5 years, seem to trade everything the same. Like every single day is exactly the same. Right? You sit down, trade. Then a new day, trade, 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 trade. Especially when you're doing smaller time frame stuff. And you're like, price is always right. I don't like fundamentals. I don't like long-term technicals. I just like to trade, trade, trade. Well, you'll find out that not every day is equal. Not every week is equal. Not every month or even quarters are equal. Okay? So if they're not equal, if they're not all the same, if it's not like Groundhog Day, every day is the same, then you should be able to qualify each day or each week. And so, yes, going back to John's comment, if you see a lot of whipsaws, maybe stop trading or maybe cut your lot size in half and say, okay, well, I'll play this game. I guess I'll play this game, but I'm not taking full risk on it, right? You get in the habit of qualifying. And then, therefore, when you get into that habit, the first part of that whole qualification process is finding market conditions that are not favorable. You don't like them, so you're cutting back your risk. You immediately cut your lot size in half. Now you have half the risk, but you're still looking for opportunity. But then later down the road, which takes a lot more time to get to, you understand the market conditions that are not favorable because you've done that for a while. But then all of a sudden you get into situations where maybe you become more aggressive. Maybe not double your lot size, but maybe get in more trades. And there are times when you want to do that. Boom, 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 boom. Right? And then jam your stops as quickly as possible, but to remove the risk. But and that, I mean, I don't know, we might be talking year 10 now, right? Year 5, you might realize not every single day is exactly the same, so therefore you need to qualify the market conditions for your trading. And then 5 years after that, you become not just a way to pull back the throttle, but you know when to put the pedal to the metal as well. Because I'm telling you, there are times when market conditions are great and you should kill it, crush it, destroy it. You need to make a ton of pips. When it's raining money, get as many buckets as you can. When the fish are jumping in the canoe, get more canoes. Now, you might laugh at that, but let me tell you, it's more common than not that people say, oh, I made my 50 pips today, I need to walk away. What are you talking about? You have a limit on how much money you want to make? And then they say something really stupid. They say, well, I don't want to give it back. What? You got it right today. Market conditions are favorable to your trading. Make 1,000 pips. Oh my God. But then what happens on the losing days? Oh, well, right? They can lose 150 pips, but they can't make 150 pips, right? So it's amazing how we start everything backwards. Now, first of all, no professional investor gives a damn about your win ratio. Well, I made 50 pips today. What if I give it back? Nobody cares, right? But when you're making money, make tons and tons and tons of money. And when market conditions suck, cut your risk in half and slow your trading down. Okay? Gold. Anyways, you want to do some oil? You can't live. Well, oil be. So this goes back yesterday. So let's go to the energy complex. Yeah, preacher. Well, it's amazing though how so many of us do the wrong thing, right? When we're losing, we overtrade, and when we're winning, we stop trading, right? Like, why is that? You know it's true, right? All right, so nat gas, remember this? Not just nat gas, but let me squeeze this in. We identified a top for Brent. We identified a top for WTI. Now, the funny thing, this should be going up, but the correlation isn't amazing, is it? It's not amazing correlation at all, but nonetheless, isn't it cool how yesterday we had these coming down? Right? Hey, by the way, there's 106 people right now. Can I get a like? I'm trying to combine education with opportunity with entertainment. It's not that easy, man. Come on. Share it. Just takes you a bajillionth of a second. Okay. And also, if you want me to cover specific currency pairs next, please request that in the chat. Okay, cool. So anyways, we have our little squiggly little lines. And it's really cool, I think, where it's up, up, up for so long. And now we have on the smaller time frame, let's maybe go to an hourly now, and let me clean this up. Okay. Yeah, is this now going to be a point where you go lower, low, lower, high, lower, low? Could be. All we know is this is the sell zone. That's all I know is bulls were supposed to take profit yesterday. And we talked about it very, very specifically. And then I showed the correlation. Like the top of the week, the conservative top of the week for WTI was supposed to be 71. Actually, $71.04. Right? Predefined. There it is, 71.04. Okay. I think it went 1 penny higher. Yeah, 1 penny worth of accuracy. Okay. I still don't know. I apologize. I don't know. And I haven't had time to follow up with it since then. Okay, and I apologize. It's my fault, not Trader's Wade's fault. It's my fault. Is that right, Johnny? Cool. Okay. But notice these are important things. This is why we use these tools, right? Isn't that amazing? So anyways, what are we going to do now? Well, I am a bull on oil, right? Do you remember when we were at, how long ago was it? I think it was even farther down than that. Either this bottom or that bottom. Let's see, that's June, so that's before I went to Harvard for the summer. I think it was this one. I think in here, I said that you should make a decision, and maybe because it was a bottom or something. I mean, come on, we'll all wait for Microsoft. Okay. do its thing. What the hell is a shared experience? Microsoft sucks so bad. It's unbelievable. Okay. All right. Do you remember talking about this down here? I said you need to make a decision. Do you think oil is going to hit $40 next? Right? Or is it $80 next? Either way, it was a $20 trip because we're at basically 60, right? So are we on our way from 60 to 40 or are we on our way from 60 to 80? And I said by the end of the year, like not obviously anytime quick. I mean, $20 is a lot of price change, right? But do you remember that question? I said that's the question you need to ask and should set up your trading until the end of the year. Well, no, the target 72 was a year and a half ago. 72 we did like way down here at $50 a barrel. I don't remember why it was 72, not 70, but it was 72. So you know, but it took us a long time to get there. Anyways, going back to here, that's where I asked the question. Like, if it broke support, it was on its way to 40. If it stayed above support, it's on its way to 80, is the idea. So once you make your decision, that's called a bias. And from there now, if you were a bull, which I was, then you can start buying dips and setting up bullish swing trades and all that kind of stuff. Like this one opened out of position, so you got to catch the 4-hour 21. Oh, nice. Okay. Opened out of position, grab the 4-hour 21, right? And that's a resistance area. That's where you're supposed to take profit. Okay. Now, if you're a bear, okay, you're selling elevated, which is fine. Okay, so now if you're a bear, your next move is going to be based on price action, right? Okay. Does that make sense? If you're a bear, that's what you want. Okay. Bulls are probably going to look at something like this. Okay. Yeah, I'd die for you. You know it's true. Everything I do. All right, anything else? We did Aussie yen. I think somebody said Aussie. I mean, I guess that's Aussie dollar. Okay. Oh, I didn't catch that, Charlie. Okay. Yeah, so on a weekly, monthly basis, this needs to head up if you're a bull. And as you're a bear, you're riding the 21 down. Don't know much else to say about that. I mean, obviously, you're selling the 21 as a bear. You're doing things like roll reversals. I mean, it should be pretty straightforward. And as a bull, you need to get above that, right? And bulls are really desperate. It doesn't look good for bulls, but they're going to try to do this. Okay, but once again, I hate sitting around planning reversals because they don't tend to happen. So the other stuff's pretty straightforward too. You know, selling these retracements to the 21. I just, you know, and these are all roll reversals. So, I mean, I see them as pretty easy. So if you're a bear, I'm pretty sure you got this kind of stuff going on anyways. It's very, very basic price action. Yeah, so you probably have it already. So I don't want to just kind of be like Captain Obvious type stuff. This would have been disconcerting to you as a bear because you would have already been through your sell zone, but you're not above any resistance. So you could totally sell this on a 15-minute, this 5-8 cross rollover. It's not amazing, but you could do it for sure. Because, you know, like when you were down here, again, a pretty basic price action. When you're down here, you look left, drag it across. And you would have sold about this 21 because you would have looked at it as roll reversal off the 15-minute 21. So, like, if I was trading this, I would have been short, like, 70, you know, 70-ish. You know, we're at 72 now. I mean, we're not far off, but the thing is, the down, 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 you know, I would have pulled the trigger sort of in here. Okay. But like we haven't even breached this pivot. We haven't breached this price resistance. We haven't breached a 50%. So like I could totally put my stop up here around the 200 EMA on the 15, sell, and walk away. Okay. Okay. So seems pretty straightforward. Kind of feels like consolidation though, doesn't it? Feels like it's going to go down and then up and then down and then nowhere. Anything else? How can I help you? Eh? All right. Well then, peace on earth. May the pips be with you. May your profits be above average. I'll see you tomorrow. Thanks again for being a client of Traders Way. If you're new, please visit tradersway.com and open up a demo account. Give us an opportunity to earn your loyalty and respect. Don't forget to subscribe to the YouTube channel on Forex.Today so when I do these events, you're notified and given the link directly so you don't have to, you know, search how to get here. And once the video is over, if you refresh your page, it would be wonderful if you could leave a comment and just say hi or thank you on the recorded video. So anyways, peace on earth. May the pips be with you. May your profits be above average. Cheers.